Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Julie Biel, Portfolio Manager over at Kayne, Anderson, Rudnick, to discuss concerns around the labor participation rate and the demographics it is impacting most. Julie, it's great to have you with us. Welcome to Trade Talks.
Thank you so much for having me.
The unemployment rate may appear to be low, but there is more to the story below the surface. How concerned are you about the labor participation rate?
So the labor force participation rate is something I've been paying a lot of attention to, and I think it could be one of the causes of why the recovery post the financial crisis seemed a little bit slower. You had consistent declines in labor force participation, and then obviously with the COVID pandemic, that dropped off a cliff. It's only kind of halfway returned to the places it was pre-pandemic, but even pre-pandemic, we were kind of on a steady decline. And I think that that's just a persistent headwind that we're seeing, and it's an important factor in how well the economy is going to do going forward.
And Julie, do you think it's due to unemployment benefits?
So what's interesting is that if you look at the data, unemployment benefits officially kind of rolled off in September, but there were states that rolled off their unemployment benefits before that, and it hasn't had an impact on labor force participation, which indicates that, universal basic income and that those sorts of programs, they probably don't discourage employment the way that we think they do. There's probably a more powerful underlying factor that I think is at play here.
Where's participation the weakest?
So the weakest point of labor force participation is among women, and this shouldn't surprise anyone. If you think about who was the most impacted by the COVID pandemic, it was many women who had to stay home with their kids because schools and daycares were closed. And even though schools and daycares have reopened for this year, many parents are still concerned that they will close or could be on and off. And so most women are the ones who are the caretakers staying at home, and they are the ones who have been, reluctant to come back into the workforce as a result. And I think that's a problem because, we had seen higher levels of labor force participation among women, and most of our young graduates, our valedictorians, they're women. There are more women graduating college right now. And I think it's a concern that we need to think about how to address more flexible labor situations to accommodate young mothers who have younger children at home.
How bullish are you on the consumer? We know demand is certainly there, but stimulus is not.
Right. So I think, if we think about last year, and the holiday season last year, what we had was enthusiasm and hope around the vaccines that had been released. We had a tremendous amount of government stimulus, and people had been staying home and saving. So it made sense that people were feeling a little bit more optimistic and ready to spend. And we saw that release in personal spending and saving that had been accumulated during the early days of the pandemic. We're now at a place in terms of personal saving more in line with historical trends. We're still above, but we're more in line. And so I wouldn't count on the consumer being as strong as it was last year in the holiday season, because there's more negative sentiment, there's more division around vaccines, there's not the same level of stimulus, there's not the same willpower among our politicians to put in more stimulus. And so I wouldn't count on the consumer to drive the rest of the year. I think they're a little bit more impacted than they were last year.
So Julie, with all the unknowns out there, how are you recommending investors to weather the uncertainty?
So I think now is a great time for us as long-term investors at Kayne. We focus on quality, and I think that is the place to be when you have this much uncertainty. You can definitely make a case for a more bullish recovery, a more bullish economy. So I'm definitely not saying we need to get very defensive and aggressively defensive. What I think is more important is finding businesses that can do well, especially in an inflationary environment, businesses that have really strong competitive protections that are going to enable them to do well if there is a more difficult decline in the second half of the year, and then positioning yourself for the rest of 2022 and beyond.
All right, Julie, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.